So I did receive some feedback that we should try to go over Fibonacci more, and also certain candlestick patterns, reversals, like a bearish and bullish. So if you guys are okay with that, we can get started with that. Or if you guys want to, start by asking questions, or what do you mainly need help with as far as your trading? What confuses you? What works for you? Just to add on to that, feel free, to engage, interact, suggest. Okay, I'll wait 1 minute, see if we get any question. If not, we can just get started. All right, I don't see any questions. So let's start with some candlesticks, right? What people, might find confusing is, which candles I should enter on, what is, considered reversal, and, stuff like that. So let's take this part right here as an example, right? First of all, you should have your zones marked up prior to trading, obviously, to where the market structure is at the moment. I already covered this, past few weeks on these calls. I do my trend lines on a weekly time frame, so identify overall trend of the pairs. Then I also do weekly, support and resistance. This is now resistance because we broke below and we confirmed the breakout. After that, I move into the daily and 4-hour, which I use green lines for to identify intraday and daily support and resistance. Because pairs do tend to give us a retrace off of those zones. Also, sometimes we can see reversals from them, so they are very important. And essentially, when it comes to the candles, you should follow the price action, right? When it comes to the one of those levels, you should see, if you get any reaction from it, right? So let's say you were selling from here, right? And you kind of saw this weekly previous support, approaching, and it kind of broke below, and it didn't really confirm as a official breakout because we had this reversal. So as you can see here, this big bullish or green candle was one of the reversal candles, right? This specific candle right here is called hammer, right? And you see it's exactly reversal from the daily support, right? Which is my green line. So for example, let's say you were selling, and then you see this red candle. As soon as this new one opened, we can go on 1 hour. Just highlight it right here, so we can go back to it on a smaller time frame because we were just using 4-hour. So we're gonna zoom in here. This is why it's important, to go on a lower time frame to see what is happening. So now we have the 4-hour candle broken into, 4 1-hour candles, right? Including that right here. So this was essentially start of a new 4-hour, which we are observing on 1-hour chart. So you saw it came right here, and then you were still in a sell. But then we see, some consolidation here, right? Some people call this like a railroad when you have few candles and then you have reversal. So this is a railroad formation pattern on the candlesticks, right? So if you saw this bullish candle, you may have closed, you may have thought, oh, this is going to reverse now from this daily support, but then you had another bearish candle, which did nothing but fully tested this support, because this one was shy a few pips. And then right after that one, we have, bullish reversals, right? We also have a bullish doji that looks like a hammer, right? And after that, we have a huge bullish, inverted hammer candle. Um, I would like to see, further wick, to really have it as an example of a inverted hammer. But because the body is bigger than a wick here, some people consider this doji, but the doji is really not this, right? Because this is more like a hammer, right? The doji is something like this candle right here, because you have, wicks on both sides that are equally long, and then you have body in the middle, right? Or you have a candle, which is one right here. You can mark it. It's not working out. I'm referring to this candle right here, right? I usually never trade them, but they are just as a confirmation, as soon as it broke above, the resistance, we came against support. It confirmed that this is, gonna hold above this level, right? And then obviously what you see, further bullish movement. But what I wanted to, break down is, just trying to observe them as they, form around the key zones, right? You don't want to just enter on something like this, this move has already been made, and then you just entering because this is a bullish candle, right? That's not necessarily, the best time to enter the trade, especially after there was a movement, and the move has been made for about, let's see, this. Let's do it from here. And already made move for about 63 pips, 64. And obviously you don't want to enter, after that big move has already been made. You want to try to enter as close to, these key zones as possible. And that is where, like I mentioned, you look for those candles. So that was the example of one. Let's look for another example. So you see here, let's take this as an example. You see here like a consolidation, and then you have a big bearish breakout, right? So this, I personally wouldn't have traded, because they started to consolidate right around the weekly support that was at that time, right? So for me, I wouldn't enter this. And after this big bearish breakout, I would still have waited, right? Because usually when we have breakouts, we wait for retest of that zone before we can enter it again, and that is exactly what happened. We had consolidation for 4 hours, then we have this big bullish to retest into the zone, and then continue to fall. Eventually, we had series of retests before we could essentially sell this, but it didn't really give us much of a move. All it did, it came back to the daily support, which still would have been, decent trade for about 50 pips, right? Let's now look for another example. I'm trying really to find like an engulfing candle that is very, very powerful. So we have something like this. I like when I see this formation right here. So this is what's essentially is known in the market as an evening star, right? You have a bullish candle followed with a smaller bullish, which actually the one in the middle was inverted hammer, and then we have a big bearish engulfing candle, right? So this is called evening star candlestick pattern, where usually you see the reversal in the market. And that's actually what happened. After this big engulfing candle, it's called engulfing because it completely covers the previous candle, right? Means it engulfs it, right? So right after this formation, you could have entered on the next following candle, even though there was some pullback. But this is actually one of the very powerful candlestick patterns essentially in the market. So right after this formation, you would have entered sell here, and then you can have brought it down, or let's say you entered here for about 115 pips, because that is actually what I would have done, because I know my weekly zone is right here, right? And I know I'm safe to trade it down there and take my profits there. And what happens, usually around the key zones, you have series of consolidations and retests. What I use, and I shown this before, is channels. When this starts to happen, look for the breakouts. So let's see here, we had a fake breakout above, came right below, right back into the channel, bounced off of the downtrend in the channel, came back up, retested, and then we had a breakout. And what I love to see before I enter the trade is the retest again. See, breakout of the channel, retest, and then you keep selling it down, right? To find more examples on reversal candles, here we go, right here, beautiful. So here we go, another engulfing candle. Look at it, right? So if you were in the sell and you see this big engulfing candle, also they tend to call it the anchor candle, because to illustrate the powerfulness and strength of it, you would have definitely tried to either take your profit after this candle, or if you entered somewhere here, to cut your losses, because see what it does. The following one is even higher impulse. This may have been news, or it just something that caused it, but you wouldn't want to hold this further up, because you will just end up in a more drawdown. And depending of your risk management, which you should have, you should try to prevent further loss. Let's see. For another formations, I'm really trying to look for what is called morning star, something that we have seen here, just the opposite way, because this is the bearish reversal candlestick pattern, evening star. The morning star would be bullish. So let's see if we can find any. Certain pairs don't present them so often, so it's not unusual, to be hard to find it. Here's another example of the bearish reversal, big bearish engulfing candle. You can enter on the following and just write it down. Let's see if I find an example. Trying to go back. All right, here we go. This is one. Right here. Okay, so even though this bullish candle was not necessarily fully engulfing this previous bearish one, this is what's considered the morning star, right? You can also Google this. We had bearish and then bearish rejection, hammer, leaving the wick behind, and immediately following up with the bullish pressure, right? And then right on the next one, you see the market, pushing further up, and then essentially it did consolidated, but if you squeeze it down, you see it kept going up. So if you would have entered right here, and held this trade, you could have gotten up to 145 pips on this, right? And you shouldn't be scared of this pullback here, because all it did, it came back down to retest this zone, right? all it did, it came back to not even fully retested, right? But let's say your entry was right here, right? So all it did, it came to retest your entry. So if you were not happy with this profit right here, or maybe you have moved your stop loss at break even, it came back down, that's fine, you know, nothing to worry about. It came back down, but then you see, you know, the weak rejection, right? You see the vectoring in this area. Vectoring is when you see candles, you know, rejecting certain price level by leaving wicks behind, right? That's another candlestick pattern, very powerful. You know, when you have, you know, few candles in a row leaving wicks off of certain, you know, level price level. So let's say the example we were mentioning, you were in profit when you bought here, and then, you know, you decided to keep it, came back down, you know, closed you at break even. That's fine. You wait for this new bullish candle, and you see that the price is gonna come back up, and you enter on the second one, and you still get, you know, up to 124 pips. And why this is important, and you know, it's also part of the, you know, trading plan, right? You know, not allowing winning trades to end up as a losers, right? That's very important. You know, cutting your losses and protecting your profits. If you don't take any partials when you are up for about 64 pips, if you decided to not even take full profits or partials, doesn't matter. Here's another opportunity to enter, right here, and then you can write it up. But you prevented, you know, this from falling back down and then and end up in a loss, right? You prevented that loss because you had your stop loss at break even, and you have been granted by market another opportunity to enter buy this. So that is how you know should look at it, and just to implement those good trading strategies in order to, you know, win in the long run. Okay, here we go, another evening star, right here. You know, we have bullish, then we have bullish, but you know, with the rejection, you know, hammer, and following up with the bearish. And if you entered right here, it doesn't matter, you would be in a drawdown for about 11 pips, but then it ended up falling down. Let's see how far. I mean, essentially the structure carried it back down. And that's why it's important to know overall trend, you know, your JPY is overall bearish. So that gives you, you know, further confirmation on this. So let's say you'll be in drawdown 11 pips, but you would have gotten 100 plus pips, 110. You know, that's amazing trade, you know, that's 1 to 10 risk reward almost. You know, 1 to 11 pretty much. So those are the ways that, you know, that you can specifically pay attention to the candles, because, you know, you may have heard of the saying that candles tell you the story, and they really do, you know. Here we had again, you know, breakout, and this is why I love, you know, the channel breakouts, because, you know, they had the channel right here, look after the breakout, you know, had this retest and came right back down. Another amazing trade. Even if you didn't enter here, you waited, this consolidated, and you enter right there, 130 pips. Well, 123, so pretty good, right? And then here's an example of another reversal. Yeah, we had this big wick right here. That's not what I want to do. But we had a, you know, strong bullish reversal, you know. This candle right here. And if you were in the sell, like from here, you were in profit for about 66 pips. You know, that's really good, you know. If you can catch 20 pips every day consistently, you know, you're gonna make a lot of money. But let's say you were 66 in a profit and you decided not to close. But I personally would have closed when I saw this, this consolidation around the weekly zone, and I would took my 40 pips and wait for the further confirmation. Since this candle left the wick and ended up being very bullish, I wouldn't have continued to sell this. I would waited for the buy opportunities, and that essentially happened right here, right? You had consolidation. This. You had a consolidation and then breakout above, and if you bought on the breakout, wrote it back up, 86 pips, right? 85 pips. And this is just going off of the candles, not even using Fibonacci or anything. Hello. So that's very powerful. I don't know if this helps you identify those candles, or you want me to go back over it again. But I really like to trade it around the key zones, right? Like see breakout right here, and then retest, right, of the weekly zone. And I would have entered sell after this bearish candle right here, wrote it back down another 70 pips, and essentially came back down a little bit more. This was also the trade that I called in the premium group. Right now, still active, 45 pips in profit. My target profit is essentially 120,300, possibly more, based on Fibonacci, and I'll show you how I use them. So I don't know if you guys first have any questions about the candlesticks or certain patterns that I mentioned. You want me to cover it again? Okay, let's see if we get any question. Hey, Holden, welcome, bro, welcome. That's fine. So I guess we do not have any question. So another topic that one of our members brought up was trading Fibonacci, and in addition using fib extensions. So fib extension is pretty much same as a reverse Fibonacci's, right? Or reverse fibs, how people like to call them. So the way I do, I measure the moves, right? So we had this big impulse move. Let me clear this so we can look at that wick, right? So right, we had this impulse move because this is where this bearish impulse started, and this is where we saw, final rejection. And here we have one of the most popular, retraces on a specific trend. 61.8 is actually one of my favorites, anywhere between 50 and 61.8 rejection. Also, one of the members asked, I believe yesterday throughout the day, hey guys, do you trade 78.6? Do you trade that Fibonacci? Obviously we do, it's right here. That's why I have it marked up. So 78.6, we have in here obviously bearish market, right? So 78.6 is essentially the last level of the retrace before we should consider, potential for this reversal, meaning this bearish trend turning into bullish again, right? But that didn't happen. We got wick off of 61.8, came back down, and this is another, candlestick pattern that essentially forms what is known as a head and shoulders, right? Started from this level, end up right here, came back up, did that, and then again made the right shoulder at the 50 Fibonacci, and we had a drop right after that, right? So even if you didn't enter sell earlier, you should have entered right after, you know, came down to level 50, not 50, sorry, 38 too, right? Rejected 50. If you were skeptical about this entry right here, you waited for this candle and open position on another, on the next candle, and it opened right here, and that's 50 pips, right? It's really, simple. Another way of looking at the target profits, besides me having my zones, is using reverse Fibonacci's, or what I, uh, what some people refer to it is the extended fibs. So all it is, going from the high to low and then low to high, that's what, fib extension is, or reverse fibs. So what we did, we measured from the top to the bottom. We got the retrace 61.8, and then you can use reverse fibs, match with the same impulse move, and then you can target 1.27. And I have no doubt, essentially the market will come to this point. Yeah, it is below my, daily and intraday support, but most of the people who trade Fibonacci use these levels as a targets. It can reach any of those levels: 1.27, 1.414, and 1.618, depending on the strength of the impulse. So, does that make any sense? Everybody's quiet. Yeah. Uh, no interaction. So let's do it one more time, just to make sure, it's a bit clear. So this was the move up to here, because this is where we, finally saw the rejection. We measure it. So this is, using regular Fibonacci's, right? Just measuring the move, right? We get the retrace, retest of 61.8. And then if you prefer to use reverse Fibonacci's or fib extensions for your target profits, you will measure the move from the low to high, which was right here, and then your fib extension levels are 1.27, 1.414, and 1.618. So first, people who mainly trade uh, the uh, the fib extension as their target profits, or TPs, they will target from here to 1.27, right? Or what I have on my regular fibs is negative 0.27. It's the same thing. You just mark it however it's easier for you, to follow it and not to get confused. you know I usually use the same Fibonacci, and I just do them reversed, and I'll show you exactly how. But if you prefer to use this fib extension like this, if the move is bearish, you measure from the top to bottom, and then you measure the same move from the bottom to the top, and that's where you get your extensions, which are those three right here. I have them marked differently, just for the better visual presentation. And that's just me. You can mark it however, by obviously double clicking here, and this is where you can change colors, set it however you want. Obviously, if you're on TradingView, you're gonna see many fib settings, but the ones that I use are mainly 38.2, 61.8, 50, sometimes 78.6, and then as extension 1.27 and 1. 618, are my favorites. But I use Fibonacci in confluence with, my zones, certain candlesticks. So to go back to what I mentioned, I don't, add this too much. So instead of me, right after I measure this move, right up to here, I know I see 61.8 rejection, right? So if I decided to go with my take profits in this trade, obviously I'm gonna still keep holding it if I sold here, because I know this market is not gonna go back up, especially after 61.8 rejection and this head and shoulder on a 4-hour. I'm gonna use my reverse fibs, going from the low to this high, right? And you get the same result. Here are your levels, right? Those are fib extensions. Rather than, measuring down and measuring back up. Whichever way it's easier for you, the outcome is the same. It's gonna give you same results. And it's just, you can try to practice with it, see what you are more comfortable with, whichever way you prefer. You will find out by practicing this and implementing it. You can look this on pretty much any pair. Let's see what GA did. Okay. Let's remove this. Okay, GA rejected weekly support. It's 4-hour. All right, so here we go. So we had obviously bearish market, coming below and closing below this, daily resistance, which used to be support. Confirm this breakout, and then we have the next move, right? It end up right here, and look what we have again. 61.8 rejection, right? This is not like coincidence. This is completely different, pair, right? We were on Euro JPY, we are now on GBP AUD, Australian dollar. So if you were to use fib extensions, you will measure the same move from the low to this high, right? And look what it did. It reached all of the before even you had this big retrace up. It reached all of those fib extension levels. So if you are not comfortable still with the zones and you just want to trade with the fibs, here's the example. You had moved back down, and your extension fibs is measured the same move from the low to high right here, and then you get your extensions, and all of the 3 TPs are reached, right? So look how beautiful this is, right? You had rejection here. Let's say you didn't enter immediately on this first candle, but you decided to enter right here, and yeah, it had some pullback right back to the entry, but obviously you don't set your stop loss at the entry point right after you enter the trade. You want to give it some room to play out. And look at this, 360 pips, reaching all 3 fib extensions, and it's just beautiful. I personally love Fibonacci's because they measure those moves very, very nicely. Here, after that happened, we had this consolidation. Let's see, we can mark it. This, now we had consolidation right there, enter this sideways, bounce, break above, and kept going up, and essentially reversed again. So let's say to measure this move, remove all this. So this move you will measure from here, right? Because this is where the impulse started, and you will come all the way here, right? And here's to answer the question that we had in a group yesterday: do we use 78.6? Yes, we do. Look at it. Last level of the retrace before trend essentially reverses. And it obviously didn't happen. You know, we had 78.6 rejection once, twice, three, four times, right? And it came right back down. So let's say you don't enter on the first candle, which you shouldn't. You should wait for a little more confirmation. Let's say you enter right here and look at it. Another 370 pips. Does this make sense, guys? Let's see if we get some questions. Let's have some interaction. You know, don't feel shy or scared or anything. Ask any questions. It doesn't have to be this. We can go over support, resistance, anything. But this was the mainly feedback that I got. You know, to cover candlesticks and Fibonacci levels along with the fib extensions. Sorry, Yemi has raised hand. Uh, you can talk, brother. I don't think you are muted. Yeah, just unmute yourself and feel free. You are unmuted. I just cannot hear you as of yet. From what point? So I measured from the oh, Sean, we are already in a sell. I don't know if you check the premium on Slack. It's gonna fall down. But let me go back to Yemis. So let me just box it up, right? So you can better visualize. You see this move right here, right? Impulse started from here, it ended here. How we know that it ended here? Because it didn't continue to fall down. Does that make sense so far, Yemi? Please keep chatting with me so we can make sure we following the same. So impulse started right there with that bearish and ended here with this bullish. All right, awesome, awesome. So when you see the impulse move, right, and you see where it stopped, this is where you measure the move. So from this level, because that is where it began, up to here, that's where it stopped, right? So that is what you measure then, right? And this is, usually on GBPs you don't get such a strong pullback, but we did experience here 78.6, and as I already mentioned, that is the last Fibonacci level for the retrace, and that will, and should continue, further downtrend in this case, right? Does that make sense, right? So this was the impulse move, we measured it. Now here we go another one. Once we notice that this was rejecting, right, we're gonna measure it again. Not from here, but from here, right, up to this level. Let's make sure we cover that. Let me try to zoom this as much as possible so it's easier to see. See, it started right here. Why we don't measure from here? Because it came back down and we had, further movement up, some bullish, and that's where essentially it came down. So if you are looking to trade this right now, right, you didn't enter this at all. You already see rejection here between 50 and 61.8, right? So you didn't enter on this candle. You can enter it right now. I'll allow it, some room to breathe. And if you want to go off of the Fibonacci's, or if you want to just write it down to this weekly, let's say from here you have 100 pip trade, right? Just to the weekly support, right? So you can do that. That is like, let's say, safe TP, or you can measure this move right back up. Here we go, right here, and then you can go aim those extension levels, right? If that is how you prefer, 1.27 your TP from here to here, 250 pips. That is if you want to swing this, right? You may not even need to swing it much because GBPs move crazy. But look where 1.414 is the next key weekly level, you know. But I wouldn't get too hyped. I would safely ride it here, see what it does, go on a smaller time frame, obviously 1 hour because we are on a 4 hour, and see if this is respected, or if something like this happens, comes back down, breaks, breaks and test this previous low, right? And then you get retest here, then you are safe to go to this fib 1.414 in the next level. Does that make sense? Awesome, awesome. What other questions you have? Go ahead. This is the time, guys. There's nothing to, hold back. We are here, to learn together. I'm not the best in the world by any means, but I'm just sharing with you guys what works for me. You know, Ronnie, I'm gonna answer your question. Um, Let me answer your question. Okay, I just did, so you can check the chat. Um, do we have any other question? Because that was essentially it. What they brought up to my attention. I've been covering with them heavily. Trends, key zones, reversals. But my favorite thing to do is definitely what else you can consider and what I would look for. Yemi, I hope I pronounce your name right. If I don't, feel free to correct me or send me a voice message in a Telegram how it's pronounced, because I don't like to, scrutinize anybody's name. So this is another thing that I love to see, right? So we had the impulse move, right? Now we have this ascending channel. So what this essentially is the bearish flag, right? So what we see here, we see a bounce right here. That is not what I wanted. I wanted the arrow. Thank you. So it could bounce right here and give us something like this, move, and then, which will, test this intraday and daily resistance. It can definitely do that. And then we have a breakout, right? As soon as this breakout happens, you watch for the momentum on 1 hour. You might get the retest of this channel, or it's just gonna keep pressuring down, and you should be safe to sell, right? Even if you sell it right here, let's say on the breakout, somewhere in this area, there's another 112 pips, right? And then what we just spoke about, you can try to, follow it back down, essentially to here. Does that make sense? Because all we had here, if you go on the line chart, is another test of this zone, right? See right here. And another reject. See how you're building your case, right? You're justifying your sells, right? This was the previous structure. You see it broke below, bounced off of the weekly support, start creating this ascending channel, and see now right here, it's rejecting this previous structure, and also we remember this was the Fibonacci level, right? So right here, you see between 50 and 61.8. So you create the confluence. You look for more confirmations that will give you more confidence into selling this. Does that make sense? Feel free, to give me some feedback, or ask further questions so we can go over it. But that was essentially what they brought to my attention to cover certain candlesticks and Fibonacci along with the Fibonacci extensions. But I always try to add a little bit more to give you a better case, and something that you should look for in the market, because all these moves, after the impulse move, right here gives you, I think we already measured, rejection of 61.8, and besides that, it was another channel that was created. Look here, breakout, retest, another fall. It's really simple. You don't need to complicate it. These are like few things that you should watch for. Certain candles, if you like trading off of the candlestick patterns. But all you really need is to have your zones marked right, and Fibonacci tool to just measure these moves and retraces for either second entry, or if you miss the move, and you're wondering, oh, where I can enter. Well, here you could have entered right here when you saw this wick on the next candle. But if you're more conservative, you waited for the next one, and obviously it's continuing to be bearish. So I don't know if we have anything else, guys, that you would like me to go over, or I don't know if you are looking at any possible trades, specific pair, if you want me, to take a look from my angle, give you any advice on it. You feel free to type in the chat if there's any pair you would like me to analyze. I know Sean mentioned your JPY, still in this, I don't know if you can hear me, Sean, but obviously had this breakout, retrace, created head and shoulders, and it's going to continue down. Let's see. Measure this. Awesome, Yumi. Yeah. Cool. Yeah. You see, already starting to reject this, because the bears are overwhelming, in this market. Bearish pressure is continuing. We didn't even get the full 50. My personal entry was here at 1.2100. So I'm up actually now 45 pips, yeah. And I'm still holding this because I definitely see this coming down. Sean, if you can hear me, I don't know where you're looking to enter. If you can give me those specifics so we can take a look, but it might be decent for entry even now because it's consolidating right here. So if you draw this channel, you can wait for the breakout to give you more confidence. But see, next I expect this next candle to be bearish. Just opened, new 1 hour. Cool, cool. Yeah, yeah. For you have same entry as. Oh, okay. Yeah, you entered. Yeah, nice. Yeah, I mean, even if it comes here to 50, I don't see it pushing more, to be honest. But I think this is something to hold for a little bit longer, at least up here, or again to test this low. So yeah. Do we have any other pairs to take a look at? I just got the signal on GA. So let's see. Actually pulled it back, but yeah, this should be coming back down any moment now. Yeah, it's just stuck in the cloud for right now, but I see this, coming back down. You said that's USD. Let's take a look. Yeah, I think that you broke that essential level. I didn't follow up with it, so let's take a look. Oh yeah, oh wow, yeah, yeah, broke weekly support. I knew it. Okay, so yeah, looks like it's gonna come down another 60 pips. See what do we have. Yeah, this should be coming back down. Yeah, at least 40 pips. So if that's what you're scalping, that looks good. Said ADUSD, pretty much the same structure. Uh, Pulling those tricks, it's exactly same structure. Look at that, copy paste. Rejected here too. Look at, um, it's funny. Just to mirror them. Look at this same structure. It's just this is what time frame? And the same time frame. Yeah, see, pretty much the same structure. So yeah, I expected AU to fall as well. So that is what you like. I think it's good to go for the sell. Yeah, Ronnie or Yemi, if you guys have any questions, feel free to talk or type in a chat about anything. Damn, did gold fall today or what, man? Bottom fell out of. Yeah, here. Yeah, 250 pips. Gotta love it. Now it broke the zone right back below and it bounced off of the daily pretty much. So what can we see? And it actually broke below this intraday trend. So let's clear this up so we can see what's going on. Slight retreat so far, but yeah, definitely rejected this levels here. But it could definitely drop down to this, 127, or I like to mark this -27. It's fib extension. Maybe essentially you get some pullback right here, 38.2, and obviously any pullback to 38.2, 23.6 or 50, it's still strong indication of, the structure continuing in its direction, which right now is bearish. So yeah, I can see this falling down. Have any other trades or ideas? How about gold? That's actually what I just covered. It definitely broke this daily support, so this is daily resistance now. I didn't update it because I was busy all day. I actually didn't trade it as well, but it's already rejecting this 23.6. So it's definitely looking very, very bearish. And I see it coming down. To this 1.39682. I just don't like it yet for entry. I would like to see some momentum, right? Gold moves with the momentum. As you can see here, big momentum came right back up. And, let's say, okay, so this is another example how you can trade off of the candlesticks, right? Let's say you didn't trade this was FOMC 1,000,000%. I can bet anything, and I didn't even watch it. We can, what time this is? 2 o'clock exactly. FOMC, press and interest rate not release. So many people were expecting. I was honestly biased that gold will go up, but seems like this small interest rate still makes dollar bullish. But let's say you missed this whole candle, right? And you waited for some pullback on the next one, and exactly that's what it did. You see between 50 and 61.8 on Fibonacci, right? You got this pullback right here, right? And maybe like I said, you missed it, right? So what you could have done, you could have put sell limit at 50, right? And you would have been in drawdown maybe just 20 pips. But look what it did. It came back trigger. You were negative 20 pips, and you should not ever have smaller stop loss than like 40 pips on gold, because it's the very volatile pair. So let's say this triggered and it came back down 155 pips. So let's say even if your risk was 50 pips, which never was reached, not even half of it, it's 1 to 3 risk reward. That's another way you can just measure this big impulse candles, you know and you could have done that because this wick was left. So as soon as this 1 hour closes, next hour candle opens, you put your Fibonacci's from this very top to the bottom, and you measure it. And that's how you determine your sell limit, if you are willing to trade this, right? Because it usually doesn't happen that you had like candle that is 200 pips and then it just reverses right back up. You know that doesn't really happen like that. Usually will continue down after some pullback. All this is to scare people away. Oh yeah, it's coming right back up. No, that's why you measure it. This is not coincidence. So yeah, Ronnie, I would wait for some momentum here, and you can enter the sell. Maybe put sell stop at one 408, and write it down, and have your stop loss above this previous candle, 1412.50. So that's if you're looking to trade this. Do we have more questions? Come on, guys. No problem, brother. You're very welcome. You're very welcome. I mean, it wasn't slow as much as I hated, being really busy with work today. So I had no chance to look at the trades beside the EJ that I was holding. But yeah, it was pretty crazy day, especially for the US dollar. I'm assuming GB. Yeah, definitely. Yeah, that fell down. Okay, so this is now back under this weekly resistance. So now, okay, so when this happens, I like to go back on the weekly and see if I can find a new support. Damn. Wow. Wow, there's actually nothing. Well, where the hell is this going? So we actually don't have really next support here. I mean, you can go back. Let's see, monthly. I don't think we have any. Yep, this is the lowest GBP USD has ever been, and you're officially looking at it. This is the lowest British pound was against US dollar ever since this has been traded in Forex market. Never been lower than this. We do have this wick, so maybe we can go off of these wicks and mark this, let's say right here, because we have 3 wick crossings, right? So this next zone would be okay. Well, this can still be, decent trade. Let's see what we have here. Okay, well, actually, this is really weird. I don't like it because there was impulse move consolidation and then another impulse move, and this was without even proper retrace. Well, actually, did 23.6, not much. So, if anything, we would have to measure this bearish candle. Yeah, and there we go. We have 61.8. And this is, beauty where you can use it on any time frame. There we go. To be a little petty, look, 61.8 rejection, right? So definitely can see this coming further down, right, to this next zone. Definitely 1.27 or -27, depending how you have your FIB settings. Possibly even here 1.414, but definitely this level, and this is 80 pip potential trade, right? So we might get this move overnight, during the London. Yeah, that was smart, Sean. Definitely, you don't wanna, if you really don't wanna trade, guys, until you're present, right? Until you can be at the chart and just see it for yourself. You gotta trust your analysis. You cannot blame somebody else for your loss. I know that doesn't sound right, because you may have subscribed to specific signal service, but you should also try to invest in your education and understanding. Because wins are great. Obviously, we all are looking for wins in the market all the time, every trade. Otherwise, it's just gambling. If you don't know what you're doing and what you are looking for and your risk management, then it's pretty much you can just book a flight, go to Vegas, and try your luck there, because it will be the same. So I don't prefer to trade if I'm not at the chart, and if I don't see this. Usually this is uh, my time zone when I analyze. I'm talking Eastern Standard Time. Between midnight and 2 a.m. This is where the market sets for these moves. And if I see something that I like, I would usually put like a sell limit, sell stop, or buy limit, buy stop, depending if it's bearish or bullish. So that's just my opinion and my take on this. So I don't know if you guys have anything to add or something new. Any other pair to look at? Let's see, we don't have any questions. Yeah, I mean, GU is just, I mean, it's such a suffering, honestly. It really is like this. This is just crazy. I mean, it's look at this weekly, man. Look at this. Like, this is just insane, man. Like, this whole week, current week, and we still have 2 trading days, like 280 pips. Like, for the past 2 weeks, if you were just selling this, that's 400 pips. Like, it's just crazy. And the one thing that it's sad is that you have to look for the next support off of the VIX. Like, there's no even candle bodies. If you and the way you see that, if you go on a line chart, you see this is where the body is at, and your current full body of the current week is below that. Like, and now you are in a situation where you kind of have to look for the next weekly support off of the VIX, and I found, crossing here. Yeah, you can argue raise it back up right here and it's now weakening it. Yeah, but this looks really bearish, so I like to, look at it further down, see what it's gonna do, because it really is beat up. And I don't see any good news coming out from UK to turn this around until, I believe, October 31st is when this Brexit is supposedly set to unbundle. But they've been going back and forth for a very long time about it. So we shall see. Yeah, even on weekly, you see the rejection right here. That's why, I mean, definitely, if anything, guys, I would really suggest you try to learn how to use Fibonacci properly. Like that will boost your trading. Like, I'm not even kidding. Like, you won't believe it. You know, once I became really comfortable with this, it's just it's unbelievable. It really is. You know, a lot of people teach it different ways. I try to, share my own way. And not my own way. I mean, I have been taught different ways, but this is the one I selected as most effective for myself. And therefore, I try to, share it with you guys just to, um, help you. And it's really worked well for me. And there's no reason to complicate it. So they're looking at UK monthly. Yeah, I mean, it's not wrong. Could, yeah, it definitely broke. This is no longer valid. It's broke above. Yeah, Newcastle is still on a even monthly uptrend, really strong. This could definitely go back up. And it's also riding this weekly channel along with this trend. Perfect bounce right there. Look, this another confluence in a trading. False breakout obviously came down, came back up, retested the resistance, right? Weekly resistance, came back down for about, yeah, not for about 500 pips. And gotta love it. And then look this confluence. It touched the channel, right? Touched the channel, and this supply zone, which is weekly support, and it bounced right back up, and now it's on its way back up. Already moved 190 pips. It's just beautiful how this works. It's really simple, and it's very effective. Dave, Ronnie, do we have any questions? Sean, any pairs you want me to take a look? For EJ, pretty sure it's gonna keep coming down. It could pull back up a little bit more. Not gonna lie to you, but see, it's already dropping, man. You're already up 4 pips. What are you talking about? Why would you exit it? You should be in a profit 4 pips. Unless that's like 3 to 5 pips that you're looking for, then it's a different story. You can use price action on any time frame. Let's go on a 30 minutes. Okay, here we go. Let's clear this out. It's a good question. See, this is still valid, right? Because we do have this channel, right, arising from here. But can we use Fibonacci? Yes, we can. Right here, impulse started, impulse ended, right? And this is on a 30-minute now. Okay, see, rejecting 61.8, right? Still same principle, right? If you go on 15 minutes, you would still measure it the same, because this is where the impulse started, right? It's just what do you become comfortable, Ronnie, looking at. So now it's creating this counter channel, right, to the downside. So it might be, you can look for something like this right here, to continue this journey down like that. Like these are, it looks silly, but this is really simple and effective. If you keep practicing this, or just go back testing, you will be able to spot this so many times. That is why you don't need to trade, 10 times a day. You catch one of the trades like this, and you are good for the day, maybe even week, depending of, your trading capabilities, as far as, your account size. I know Sean would love this. If he entered right here, came down, easy 60 pips in, 3 hours. What was this? This was 14 in 2 hours, right? That'll be 6K almost. Uh, does that help, Ronnie? Awesome, awesome. Oh, that's okay, Dave. No worries, man. We all have things going on. And you're welcome, Ronnie. You're welcome. Let's see if we have, any more questions. We covered candlesticks, we covered Fibonacci's versus, fib extensions and reversed fibs. So don't hesitate to ask anything. I don't see any questions. I will, allow more time. You can come up with anything so we can go over it. But yeah, that was oh, no problem, brother. It's recorded. It's recorded, and as soon as it saves to my laptop, I will share with you guys. Yeah, but pretty much we cover, candlesticks, candlestick patterns, both bullish and bearish reversals. And we covered, how to use Fibonacci, and we made comparison between reverse Fibonacci and fib extensions, which essentially is the same thing. I just made examples, and you can look at it, see which way you are more comfortable using it, and you can practice it, and just yes, yes. So recording will be posted. Here we go. Sean, you there? Oh, definitely, definitely. We upload this on our YouTube channel. Yeah, I think you're just getting signal for EJ. Told you, hold it. I'm holding it. I'm up 50 pips on it. Yep, yes, sir.
All right. I got a quick question.
Sure, let's go.
I had to figure out how to phrase it. But for supply and demand zones, are those like how do you actually draw those out? Um, is it how different is it from, support and resistance, the actual
So,
supply?
okay. So that's essentially the same thing, except the supply and demand are more referred to these weeklies, right? Where you have the biggest moves off of, right? Let's go back on the weekly.
Oh, so from like the really heavy structures or the heavy
Yeah,
zones.
exactly, exactly.
Okay.
Clear this up a little bit. Let's check it out again. You see like these turnarounds, right? See from here, because this was the supply zone for the buyers, right? And then if you look at it from the higher level, this was the resistance, right? This is where the demand for sellers is, right?
Mm.
And you switch back, you see how price reacts, breaks, comes retest, drops from it, you know. Same thing here, you had this fake breakout, but look at this, this is what I, covered earlier, morning star, the candlestick pattern, right? And you can see it here on the weekly, right? Those three candles right here, you had a bearish turning into the bullish in the next week and then completely engulfing it, forming these three candles refers to the morning star or rise, right? And that's essentially what happens. This kept going up, right? And then from there, came back here, and then you see the evening star, right here. This came back up, dodgy, followed with the bearish, and then you could have entered sell right here and rolled it back down.
Uh,
But yeah, supply and demand zones are around the key areas, where the most respected areas where people are really looking to buy it from there, if it's obviously supply and demand to sell it from. Like this is strong demand zone right here, if we mark it down. So if this essentially at some point comes back up here, there will be a lot of bearish selling pressure here.
got it.
So I don't know if that answers the question.
Yeah, yeah, definitely.
I mean,
The width are, I guess, the amount that it goes from top to bottom. How do you determine that based on that the entire zone? Is that just from the actual resistance or support to the end of the body of that candle?
yes. So here, after this, well, you have to go on the daily to see it more. You see how we had here, a breakout and retest, and then, it kept going to the next zone. That should be, enough of confirmation. It broke this was, weekly support. Now it broke below, retested, confirmed the breakout, and you take it to the next zone. Yeah, it did break back below, but, it break right back into the daily support, right? Intraday support. So that's why I have both of them, the green line. So it came back down and reversed from there. Because
Got you.
the thing is, the market makers, they understand this as well. They understand, psychology besides the traders, even the ones that, know how to trade. They know they're gonna trade zone to zone, on the weekly, because that is, you know, the safest way to go. But then they push this, you know, further down, and then people were, oh wow, this broke below this weekly support, let's just keep selling it. But no, it just came down to the daily support, and it came right back up.
Got it.
And, you know, essentially consolidate. Now it break below, and, you know, see right here why I've been calling sell on EJ if you saw in the premium group. And also I've been telling Sean now that he's safe to sell it because he was looking at it. Look at this evening what do you call it, evening star, right? Look, bullish, another bear, you know, followed by this bearish, um, more of a dodgy. It's not like a hammer. It looks dodgy because it has a wicks, pretty decent size of wicks on both sides. And then look at this huge bearish engulfing candle, completely, you know, engulfs this structure, and I know this is gonna continue falling down. You know, that's why I'm about to add more TP targets in a group after this call, because all this did, we measured from here to here. Let's mark it right. It's 38.2, right? So when you get 33 to 38.2, it still indicates very, you know, strong continuation in that direction. So, you know, something you can use as a targets is these fib levels, right? But I know it's gonna come here to this zone, or we can use, you know, reverse. So since you asked question, let's cover that again. Doesn't matter if it's, you know, excuse me, if it was covered earlier. So you also were, you know, interested about, you know, Fibonacci and Fibonacci extensions. So when you have, you know, the bearish move, obviously you measure the impulse from the top to the bottom, and then your reverse Fibonacci would be, or Fibonacci extensions would be measuring the same move, but from the low to high, right? So you match your high to low with the low to high, and you set it right here. And those are the fib extensions. You see 1.27, 414, and 618.
Right.
So I'm very confident that this should fall right down here, at least 1.27, but possibly 618, because that is, you know, confluence with this next, you know, support.
Got it.
Yeah. But I showed them an example like that, but essentially this Fibonacci extension is nothing but measuring this same move right back up. So you know, you can use the same Fibonacci, just reverse them, and you see you get the same levels right here.
Right. Yeah, I figured as much.
Yeah, so that's when I say, you know, reverse Fibonacci is just Fibonacci extension. I reverse it so that I get the same levels as if, you know, we saw earlier, just measuring from the high to low and then low to high to get the same thing. You know, it's just less traffic on the chart. You know,
Right.
and for that reason, I just use, you know, reverse fibs, but it's the same thing as Fibonacci extensions.
Okay.
So yeah. Do you have any other question?
Nothing specific that I can think of. I'm gonna rewatch the video later and you know, see all the stuff that you went over earlier about the, you know, the candlestick patterns, reversals, and things like that.
Okay. Cool. I mean, definitely, yeah. I mean, you know, I think you'll definitely like it. It's really, you know, simple, and it's just I try to, you know, look for the ways to simplify it as much as possible. You know, I mean, some people just trade, you know, candlestick patterns. You know, you can definitely do that. But you know, I like to, you know, add more confluence to it. I look at those around the key zones, or, you know, right after the retrace. So that's just, you know, what I found, you know, more confidence going into the trade. But you know, we all can see, you know, same thing in a different way, and you know, it can give us as much as benefits as to this person, despite them, you know, seeing it a little bit differently. So
Right.
you know, that's why I say, you know, what you know, look at it. I try to share it as simple as possible, and then exactly the way I use it and the way I approach it. If you maybe see it from a different angle, but it's the same, you know, outcome, just do your thing, you know. So whatever, you know, makes it easier. I just don't, you know, like to complicate too much. Because trust me, I tried so many strategies, you know, the moving averages, MACD, RSI, divergence, you know, it works really well, but you know, just, you know, I try to make it as simple as possible and just go with it. First year was, you know, kind of crazy, you know, spend more than 10,000, you know, testing 10 different strategies, and you know, but it's I say that was my investment in forex education, so I don't look at it as, you know, wasted money. But yeah, man, this JPYs might all be covering those VIX. That's how it looks. Yeah, see, just came back retested. Definitely see it going down. You know, some people, the thing is, like, some people will buy right here, right? Didn't mean to change to those candles, but they will buy like right here at the bottom. You know, they see weak rejection from the previous low, and they're probably a bunch of people in the bottom. This, you know, we can find that out. I don't like Yahoo, what it's doing. Um, I don't know. It's sometimes randomly just switches to Yahoo as a default search browser.
Worst.
I hate it. Okay. No report. Say 61 of the clients are long on this market. Told you. It's gonna be people diving into this buy, but it's not gonna work out for them, you know. And
Is it usually the reverse of this website? That I've seen you use it before.
yeah, so the this number I like when it's between 60 and 70%, which actually is now 61. That's what I use. You know, as far as fundamentals, you know, I would use this, you know, to tell me, okay, yeah, the market makers know that, you know, people are jumping into these buys, and they're gonna push it further down, collect those stop losses, and essentially it is supposed to go in that direction because we do have this next zone, right? And they know that, they know how, you know, retail traders are thinking. And you know, that's why, you know, I love, like I said, Fibonacci's. It helps you measure it, and also tells you, you know, if it actually is reversing. But I don't see it happening right now.
Right.
Yeah, 61.8 rejection. Look at it, once, twice, and then made head and shoulders here on 4 hours, and Down we go.
I might even get in now and write it down.
I think Sean just entered recently. So this is another thing. Remember this, Dave. I can see this making another evening star. Look this bullish, and then we get this unusually next 4 hour, which will start in like 15 minutes. It's gonna be that bearish engulfing to form this as a evening star and to push it down.
Right.
I wouldn't be surprised to see that at all because I've seen it many times.
EJ move a lot more during the day. I mean, on with our time zone, with
Uh,
Eastern time zone.
Honestly, I don't think it moves during the New York just because it's euro and Japanese yen. And usually, when New York starts, it's like what is it? Like 4 or 5 p.m. European Central Time. So
Mm,
the banks are pretty much closing, and it moves over the night. It starts in about an hour because that is heavy Asian volatility coming into pre-London. It can move on right after the Tokyo session, which actually I think this was, this was actually, well, actually today it did move between 1 and 5 p.m. This was that drop. Um, it's not so common for it, but it happened. But that was all leading. That was right after this head and shoulder completion, and the new 4 hour candle opened, and it was the reversal pattern off of 61.8 rejection, and it just kept pushing down. So not so surprising, but as far as the time of the day that it made this move, it is kind of surprising.
got
But
you.
that's why you refer to what chart is telling you. So you don't have to like guess, hey, what should I do? Why would I do it? But yeah, you see, left shoulder, head, right shoulder, came back down. And the way this is valid is because of, you see, this left shoulder to the right shoulder doesn't really exceed this left shoulder, right?
Yeah.
It's about the same height. So that's how this pattern is valid, right? If this kept pushing up into the head level, then you might start thinking, oh, okay, maybe this is actually reversing back up, but that didn't happen. So yeah, here, yeah, yeah. Just created. So this in a market is called, it created equal shoulder, right, in the same level.
Yeah.
So if you didn't even enter it here, you could have entered on the next bearish candle, and it was a nice drop. That's where I had the sell stop that I put in a group, and it did fell 72 pips down. So either way, you're winning this trade. But yeah, it's the entire trading is recorded. After the meeting is done, it will save on my laptop, and I will you know give it to Sean to upload in a YouTube channel so you guys can rewatch it.
Thank you so much for this.
No problem. You're very welcome. I will. I mean, the one thing is, I really try to see if the guys in the main chat will be free and open about what part of the trading they are stuck with, whatever it might be, risk management, trading plan, choosing the pairs to trade based on their life and work schedule. You know, I just, you know, I covered kind of, you know, that in the past, but you know, I would like to, you know, see more people on, because you know, I just try to, you know, help you guys, you know, as much as I can. And you know, if I don't get any feedbacks, you know, I will just, you know, start, you know, adding, you know, some of my own content that, you know, we can just keep building on, and they can always go back, you know, rewatch the sessions, because even though it was, you know, a few weeks ago, it applies in, you know, price action and the structure, you know, going forward. It's just the same thing, just being able to recognize it and take advantage of it. So if you guys have any, you know, questions at this moment, feel free. If not, then, you know, we can wrap up the call, and uh, I will start saving it, you know, on my laptop, and we can, you know, get it on the channel so everybody can, you know, watch the recording.
Yeah, I think we're set, man. I appreciate it. Appreciate your time.
No problem, brother. Anytime. Okay, then I'll catch you guys in a group, and I will have this saved, and try to have it, you know, up as soon as possible, so you can guys go watch it from beginning.
All right.
Okay, I have a question.
Okay, go ahead.
Okay, from the EG analysis, are we looking for a bearish movement throughout today?
Yes, yes. It's already starting now. If you go on a lower time frame, see this is gonna start pushing down now, even on a 15. It's just been consolidating. You know, it had the retrace. If you measure this impulse move, let's even measure it from here.
Yeah, I just got in. I'm up like 3 or 4 pips right now.
Yeah, see, perfect rejection. You know, 61.8. You know, the reversal candle, and you know, it's just you know, slowly creating, you know, lower highs.
Okay.
Sorry, yeah, lower highs. So it will keep going down. Definitely see this dropping to this next zone, which is, you know, about, yeah, 80 pips from here. So I'm still in this. Like I said, Dave, you know, if you saw in a group, I posted I had sell stop at 1.121 100. So currently up 51 pip.
Yeah, I saw, man. That's legit.
So we're gonna keep riding this down.
Okay, can we have access to the URL of the website you opened some time ago, showing what the buyers are doing or what the market makers are doing?
Well, we have a YouTube channel with all the training videos. They're available for everybody. If you search, you know, let me see. I'll share the link right now so you can see here. Here we go. Here you can, you know, these are the recordings, you know, 5 days ago, week ago. Then you also have, you know, the videos from Sean. He goes over the way he trades, you know, his exit strategy, how to, you know, have a really good risk management. So let me put this link in the chat so you can access it. Just, you know, make sure you click on it, you know, either bookmark or, you know, just save it somewhere in the file so you can access it. But yeah, this will be, you know, this recording from tonight will be uploaded here as well. So
okay,
definitely.
all right. Thank you so much.
Sorry, what's that?
Say thank you so much.
No problem. You're welcome, my friend. I think just going to watch these two and the one from tonight is gonna help you a lot. Like especially those two, they are 2.5 and 2 hours long. It's a lot cover in there. The way I trade. The risk management. Uh, you know, watching for the news, where I watch for the news, if you are looking to trade something. So definitely it's gonna help you out. And tonight's trading, even though I mentioned Fibonacci, every week, tonight, we added a little bit more on it. So you're gonna definitely, enjoy it.
Sure.
Were you able to access the YouTube link? I don't know if you heard me.
You
Oh,
just
yeah.
probably drop the YouTube channel in the main chat, and then they could all get it from there too. Not the webinar chat, but like the actual K2 chat on Telegram.
Yeah. Okay, I think you got it now. Perfect. Okay, so we're gonna go ahead wrap this up. This could Dave do something, come back up, maybe even this 618 one more time, but I'm holding this. I'm confident in this coming down. I think that this will actually start moving in about hour to 2 hours. So I don't know if we have any news. March, FOREX.
Today is majorly on
I was not able to hear you. I don't know if it cut him out. Were you able to hear what he said, Dave?
No, he cut out. I couldn't hear him either. We have a lot of news at 7.
Yeah, there's a bunch GBP.
I should be up before then though. I'll take a look.
Yeah, I'm gonna try to be up till then. Bank rate might be the same, but this is gonna move a lot. And inflation report.
If anything, it'd probably push it down.
Yeah, I mean, I honestly don't see them, recovering just yet. I mean, GBPs in particular, and then Carney speaks. So this may push it one way, and then his speech reversed it. So there's definitely going to be some movement here.
Yeah, I'll check it in the morning and probably just put stop loss and profit if anything.
Yeah. So you are in GBPs.
Yeah, I'm in. Let me see what I'm in.
See this. See what is it doing?
I mean,
Like this final push, Dave, is just gonna make this, like a pin bar. I think he's still breaking down. Let's just watch this. I'm just curious to see what this is doing. It is getting some pressure.
John also mentioned NZD Chef for a sell.
Okay, but I missed what GBP you said you're in.
JPY.
Oh, okay. Where did you enter that?
Actually entered for a sell earlier when it was dropping, and then it looked like it actually gapped. It gapped and then started to come back up.
Let's see.
At least from what I could tell. I'm looking at it on the hour too. Let me see.
It's rejecting again. And you said your entry?
My entry was right when it started to come back up, actually. Hold on, I'll tell you exactly. $132,202.
Oh, that's not bad. I mean, yeah, you are down 24 pips, but you see right here is rejecting 50.
Yeah, I'm gonna hold it. I'll see what happens in the morning.
Well, at least should come back down here. It's like 50 pips from your entry.
That's
Okay.
what I'm hoping.
I have a question.
Okay.
I entered the Euro GBP sell since yesterday from my own time zone here.
Okay. Where did you enter it?
My entry is 0.91087.
087. Okay. 910. So you're down 3 pips now.
Yes.
Well, the thing is, it did came back down. It broke. It broke under this, support. So it could be definitely validated as a resistance now. And let's say measure it here. Yes, it only 38.2. So this looks like it's gonna keep pushing down.
Okay.
Only gave 38.2, and also it looks like it is forming this channel as well.
Yeah.
So something you can definitely watch for this breakout.
Yeah.
Yeah, I mean, if somebody wants to get in this, I would put sell stop at 0.91 even. Once this breaks, it should keep coming back down. Because this pair is just, we look on the dailies due to massive correction, right? If you see right
Yes.
here, this is big bearish engulfing candle, and now
Yeah.
this daily is just retesting that zone that this candle broke back below. So yeah, it could fall 100 pips from here to this next. This is a weekly support. So I personally see this falling down. So if I was you, I would hold it. I might actually enter this tonight because it's looking promising. Just well, I mean, this fall was due to that GBP retrace. So
Okay. What of GBP and ZD?
GBP NZD. I got you, Dave, for that NZD CHF. I didn't forget.
Yeah, no problem, dude.
This it would be good if it would pull up a little bit more, but it's riding this channel. Had a fake breakout. Are you in it or you are looking to trade it?
A minute.
What are you in? Buy or sell?
Sell.
And your entry?
1.84873.
4,873. Okay, so you're down 27 pips.
Yeah.
I would see it is reject. Well, I would wait and see if it respects this 61.8 and then finally breaks below this channel.
Yeah.
But the thing is, when you trade, right, you have to think of it this way, right? Correlation between the pairs that you trade. So you said you are in the sell Euro GBP, right? So you are betting on weak Euro and stronger GBP, right? And then at the same time, you are selling GBP against NZD. And NZD is a weaker pair than Euro. You see, that kind of contradicts itself.
Yeah.
As far as the currency strength, right? You sell it on one side, you buy it on another one. Usually if it goes one way, it follows throughout all the pairs it's tied to, right? You will rarely see, EG go up and, all GBPs go up, because that doesn't make sense, right?
Yeah.
As far as, you have to also start learning, pair correlation.
Okay.
Because you contradict your trades, So right now, I mean, I would wait to see if this rejects this level and breaks below. But if it breaks, you can add another position like a sell stop at 1.8470 once it starts dropping, so you can catch that move back down. Because if it breaks this right here, something like this gives us a retest, it's gonna go back down to at least here, if not this, previous low to test it.
Yeah.
So, and that would be a really nice move,
Okay.
So I would, look for something like that. Or if this comes back up, breaks, retest, and then you see again continued, bullish momentum, then cut your trade, cut your loss, because you're gonna reduce loss on this trade, but you're gonna gain on Euro GBP because that's gonna fall if this goes up, right?
Okay.
So, but yeah, and also pay attention for the news in 6 hours, because those are very, very strong GBP news, economic news, and it definitely is going to make pound move.
Okay. Thank you so much.
No problem. You're welcome. Let's do it. I should have it somewhere here because people like that. So keep looking at it. Yeah, right here. Are you in this, Dave, or?
No, I was saying Sean had mentioned it looks like a good sell earlier in the chat, webinar chat.
Okay, let's find the next weekly support. Okay, good. We have material. Nice and spicy. Let's see. Wow, this is pretty bearish. Yeah, I mean, it does look like another 50 pip fall, but let's see what the intraday zones tell us. It broke that. Yeah. There's gonna be something. Okay, so let's see what we have here. So it's in between two intraday, levels. This is resistance and support. And let's measure this move. Yeah, it did reject it and close below, 61.8. So it does look like it's gonna fall. So from current level to here, that's 24 pips. But to a bigger level, which is our next weekly zone, it's 45 pips. So if that is something that is, in your trading plan, you can go for it. Let me see, risk reward. Actually, you can enter now with maybe 25, 30 pip stop loss, but that's like one-to-one risk reward. So I personally don't do that. I look for at least 1 to 2, but most of the time 1 to 3, 1 to 4. So I see dropping, but I don't like risk reward on it. If that makes sense.
Yeah, definitely.
Yeah. So I think we can, find better opportunities throughout the London rather than forcing this. But yeah, it's you see the new candle starting that drop. See the new. This would be funny if this actually happens exactly as I said, that this new 4 hour is gonna complete this evening start. But once you follow certain things and they happen before, you kind of like, Sean makes fun of me, man. You are like a clairvoyant, like you can see this. Like I don't see future, bro. I just, based on what I've seen before, uh, it's not like getting lucky. It's just training your eyes to see it.
Knowing what to look for.
Yeah. Yeah, let's see this new hour candle is pushing down. Yeah, I can go to sleep now and not worry about holding this. That's just me. Oh, sorry, Sean. I didn't pay attention to chat. Okay, I see. You got for yeah, NZDCHF should be based on your K2 trading. It should be, a reasonable trade. So yeah, I mean, if that is all, we can wrap it up. This actually end up, going for 2 hours, so that's good.
Oh, we went on for a long time. I didn't realize.
Yeah.
Yeah, I'm gonna hang on to the EJ. I was thinking about getting into NC, but I'm just gonna hold on to this because I feel like if I add too many, I'm gonna have my margins gonna go crazy.
Yeah, and I think you will be happy with this EJ. I mean, I don't know what your target is, but you can go for 120, 200. That will give you 45 pips from your entry, but I see it dropping down more.
Yeah, I might even just leave. Before I go to bed, I might just put my stop loss at a little bit below break even and just let it run overnight. That might be good.
Yeah. I mean, if this reverses back up from here, I would be surprised because nothing is telling me that this is gonna go back up. like literally nothing. It broke below, this previous high, made head and shoulders, and it rejected, big level as well. So I don't see this, going up.
Yeah, it looks like it's at a pretty strong resistance right now. I don't think it's gonna push any higher.
Yeah, no, this I wanted. Yeah, that's what I want. Yeah, definitely, rejected between 50 and 61.8. Probably add more positions once this breaks the channel, maybe 120, 500, put that in a group. But yeah, I mean, right now, it's just market, getting orders in for next hour and a half till like 2:45 a.m. Based on the institutions, that is when orders are accumulating, because obviously at 3 a.m., European banks, hedge funds are opening, and that's when this should really start pushing down. Do you have anything else, Sean, that you're looking at, or you just said you're just gonna hold this, huh? Kind of repeated over there what he said, but okay, cool. Okay, then we can wrap it up.